Welcome back to the Tesla Daily News Podcast. Today is Wednesday, February 11th, 2026. We're covering the Tesla headlines that matter most for the stock, leadership changes in North America sales, a major shift in how Autopilot and FSD are packaged, fresh signals on the Semi ramp, and the latest on Cybercab and FSD progress in China, plus what competitors are doing in EVs and robotaxis. Story 1. Tesla just lost another key sales leader in North America, right when demand is the whole game. Context. For Tesla, near-term valuation is being driven less by how many factories can Tesla build and more by how many cars can Tesla sell at healthy margins in a slower EV market. Details. Multiple outlets report that Raj Jegannathan, a Tesla vice president and 13-year veteran, is leaving the company. He had been tapped to oversee North American sales after the prior leader was dismissed. This is the latest in a visible string of executive exits, and it specifically hits the part of the org chart tied to demand generation, pricing discipline, delivery execution, and customer experience. Impact. Investors typically read turnover in sales leadership in two ways. Best case, it's churn during a reorg and the machine keeps running. Worst case, it's a sign Tesla is still searching for the right go-to-market playbook as sales momentum softens. In the short run, this can pressure sentiment because it adds uncertainty around whether Tesla can stabilize volumes without leaning even harder on incentives or price cuts, which would matter directly for automotive gross margin. Takeaway. Watch for two things: whether Tesla communicates a clear successor quickly, and whether pricing and incentives in the US and Canada change again over the next few weeks. Leadership churn matters most when it shows up in delivery trends or margin commentary. Story 2. Tesla is changing what standard autopilot means on new Model 3 and Model Y in at least some markets, and it's a monetization story. Hook. If drivers want Autosteer on new cars, they may have to pay the monthly FSD subscription. Context. Tesla has long used software packaging to pull forward revenue, lift take rates, and smooth margins when vehicle pricing gets competitive. Details. A report out of Turkey says Tesla disabled an autopilot capability on newer Model 3 and Model Y vehicles, specifically the Autosteer function, and that drivers who want it now need to buy the full self-driving subscription at $99 per month. This is notable because many buyers think of basic lane keeping and steering assist as part of the baseline ADAS bundle in modern cars. Impact. If this approach spreads, it's bullish for software revenue per vehicle, but it's not free money. There's a customer satisfaction and conversion risk. Some buyers may feel a feature was taken away, and others may compare Tesla more directly to rivals offering robust driver assistance as standard. For the stock, the upside is higher recurring revenue and potentially better margin mix. The downside is demand elasticity and brand friction, especially if competitors keep improving standard driver assist. Takeaway. Investors should watch whether Tesla formalizes a clearer three-tier structure globally: basic safety features, a paid enhanced driver assistance layer, and then FSD. The key metric is FSD subscription adoption, because recurring software revenue can materially affect earnings quality. Story 3. Tesla Semi looks like it's finally moving from promise to production ramp, and that could open a new profit pool. Hook. Musk says Semi will enter high-volume production this year, with broader mass production in 2026. Context. Tesla's vehicle growth has been concentrated in Model 3 and Model Y, while higher-priced programs and new segments have had slower ramps. Commercial vehicles matter because fleets buy on total cost of ownership, and diesel economics are a constant pain point. Details. Reports cite Musk saying Tesla Semi will go into high-volume serial production this year. Additional coverage summarizes Tesla publishing final specs with two range variants, roughly 325 miles and roughly 500 miles. One report also cites an energy use figure around 1.7 kilowatt-hours per mile and mentions charging to about 70% in around 30 minutes. Impact. If Tesla can deliver Semi at scale, investors will focus on three levers: manufacturing complexity, battery supply, and pricing power. A successful Semi ramp could diversify revenue, strengthen Tesla's position with large fleet customers, and create halo effects for Megapack and charging infrastructure. But the risk is familiar. Heavy-duty production is hard, and margins could be thin early if battery costs or warranty exposure surprise. Takeaway. The investable signal is not the spec sheet, it's confirmed annual production volume and customer deliveries. Watch for fleet order announcements, repeat purchases, and any disclosure around where the Semi is being built and what battery format is used. Story 4. Cybercab timing and China FSD progress are back in focus, and that's the heart of Tesla's long-duration valuation. Hook. A Taiwan finance report says Cybercab mass production is expected around April at the Texas Gigafactory, and Tesla says FSD preparations in China are progressing steadily. Context. Tesla's bull case increasingly leans on autonomy, robotaxi utilization, and software-like margins. The bear case says regulatory friction and technical timelines keep pushing that future out. Details. The report claims Cybercab is expected to start mass production around April at Tesla's Texas facility and cites a target annual capacity of about 2 million vehicles. Separately, Tesla's China team has indicated there is no firm date for FSD deployment in mainland China, but preparations are ongoing. Another report says Tesla has opened an AI training center in China to support its autonomy strategy using local data. Impact. Cybercab headlines can move the stock because they touch the biggest multiple expansion narrative, autonomy at scale. But investors should treat production and capacity claims as aspirational until Tesla shows real builds, regulatory approvals, and an operating model. China is especially important. It's Tesla's most competitive large market, and local data and training capability may be necessary for compliance and performance. The upside is enormous if Tesla can launch a compliant, high-performing autonomy product and convert it into recurring revenue. The downside is delays, restrictions on data flows, and fierce local competition. Takeaway. For Tesla traders, the key catalysts are tangible: official Tesla milestones on Cybercab validation, any pilot operations, and concrete regulatory updates in China for supervised or unsupervised FSD. For long-term investors, watch autonomy gross margin potential and capex requirements, not just rollout dates. Story 5. Waymo is expanding, raising money, and admitting more human support than the fully autonomous label suggests, and that's competitive context for Tesla. Hook. Waymo says it's now fully autonomous in Nashville, while reports highlight remote operator involvement and talk of a massive funding push. Context. Tesla and Waymo are taking different paths. Tesla aims for camera-first autonomy in customer-owned vehicles and, eventually, robotaxis. Waymo operates a geofenced robotaxi service with heavy operational controls. Details. Waymo announced fully autonomous operations in Nashville. Other reports say Waymo is seeking up to $16 billion to expand its autonomous fleet and note that in complex scenarios, remote human operators can assist vehicles. Impact. For Tesla investors, Waymo's progress is a double-edged sword. It validates consumer demand for robotaxi service and keeps regulators engaged. But it also raises the bar and reminds the market that autonomy is not just software, it's operations, mapping, teleassistance, and safety governance. If the market concludes robotaxi economics require large operational overhead, Tesla's high-margin autonomy narrative could be questioned. If Tesla can achieve autonomy with lower operational cost, that would be a major differentiator. Takeaway. Compare the two models on unit economics, cost per mile, safety incidents, and scaling speed. The winner is the company that can expand service with the lowest marginal cost while keeping regulators comfortable. Story 6. Competition check. Rivian's next model is getting closer, and China brand momentum in Europe continues. Hook. Rivian's R2 is in final validation testing, while Chinese brands are gaining traction in parts of Europe. Context. Tesla's pricing power depends on how crowded the mid-price EV segment gets, especially for crossovers. Details. Reports say Rivian's R2 has entered final validation testing and has been spotted on public roads, ahead of a planned release in the first half of this year. Separately, coverage from Romania notes Chinese car sales have been rising rapidly from a small base, with more brands entering the market and at least one widely recognized rival brand expanding. Impact. Rivian's R2 matters because it targets a broader market than the R1 and could compete more directly with Model Y buyers, especially if Rivian hits a compelling price point and improves manufacturing efficiency. Chinese brands matter because they can compress pricing across markets, forcing Tesla to defend share with either features or lower prices. Takeaway. Watch Tesla's response: feature bundling like we discussed earlier, localized incentives, and any cost reductions that protect margin while staying competitive. Let's wrap it up. Today's big themes were demand and execution in North America after another sales leadership exit, software monetization via Autopilot and FSD packaging, and the longer-term autonomy narrative with Cybercab and China FSD preparations, set against real competitive pressure from Waymo, Rivian, and fast-moving Chinese EV players. For tomorrow, keep an eye on any follow-up from Tesla on who takes over North American sales, whether the Autopilot change shows up in other regions, and any concrete Cybercab or China FSD regulatory signals. If you want this kind of stock-moving Tesla coverage every day, subscribe to the Tesla Daily News podcast and follow us for daily updates.